Welcome back to India Market Open. Now, IT as a sector is one that is going to be in focus. We have Tech Mahindra Wipro that reported numbers from Friday to now. But overall, if you have to talk about the top 5 IT companies, the revenues have beat estimates. The companies have missed profits, but that's only on the back of the labor code impact that we've seen. And the better constant currency revenue sequential growth is what we've seen despite that soft quarter. The Forex remains as a major tailwind for them as well. And the commentary has been very strong as compared to what we saw in the second quarter across firms. Now, to take this conversation forward, let me get in Sandip Agarwal, from fund manager and co-founder at Sowilo Investment Manager. Sandip, welcome to the show. Always a pleasure to speak to you, Hiral, on this side. Your first, takeaway. I mean, I don't want to talk about Tech Mahindra and Wipro alone, but the top 5 companies now that have reported numbers. What's your key takeaway?
Hi, good morning, and thanks for having me on the show. So, as you rightly mentioned, all the numbers were better than estimate broadly. On the revenue front, there was slight beat by everyone, and on profit front, X of the labor code impact, I think numbers were quite decent. And also, the commentary, if you see that has been better than what everyone was anticipating. Now, this is all because you have to remember the fact that this is a quarter where there are a lot of furloughs and other impacts. So the estimate themselves are very, very muted, and based on that muted estimates, the numbers were slightly better. So what we generally try to look at is the outlook, if there is any quantitative number to it, and also the year-over-year growth in constant currency. So these are key numbers which we generally try to track. And on those two parameters, I think, still the industry is showing that it is a very, very matured industry, and growth will be very tough to come by.
Growth will be tough to come by. I know you have been of that opinion since quite some time. If you have to talk about Tech Mahindra specifically, now your deal wins have been better than the consensus estimates as well overall. Do you think things could change, because they have set a very aggressive target of 15% when you talk about their EBIT margins as well? How does that recovery look like? Because banking is something which was weak for them.
So, since the change in leadership, they have been guiding for a substantial recovery in margin. And I personally believe, based on my 2 decades of experience, that no IT company will work below 15% EBIT margin. It is very tough to do that. And that is a very, very reasonable margins to be at. And their margins have gone down in the past due to various one-time issues and other issues, and very low growth in the telecom piece. But I think this 15% margin definitely is achievable. The question is that, all the estimates also on the street, if you see, they are building in that kind of margins. And based on that, whatever EPS numbers are coming, based on that, the stock looks quite, reasonably valued. So that is the point. I would not say it is very expensive, but at the same time, I would say that recovery of margin is definitely built in the numbers.
Deep, what about a Wipro? Because the guidance is weaker than it was expected when you talk about the fourth quarter. However, the margin execution remains very strong from here on. So are you seeing anything change? Because the Harman acquisition is something that could probably support growth, but the ramp up delays is what is impacting the business.
So in case of Wipro, what we have seen that, if you see last 1 decade also, they have always, whatever surprise they had given has always been on the margin front due to tight execution and cost saving. But they have not been able to surprise positively despite multiple leadership change on revenue growth till now. So, revenue growth has been challenging, I would say, for more than a decade now. And hence, this stock, everyone, whoever buys and looks at it, they look at it as a quasi, a cash play or quasi dividend play, and not actually for growth. So I think growth has remained challenging for very, very, very long time. And we don't yet see any signs of some sharp recovery there. First of all, the overall IT sector spend itself is challenged. Then the sector for the Indian outsourcer, it is a very matured space. There is a cutthroat competition between the large guys. And now last 4 or 5 years, the additional challenge is that deal sizes becoming smaller, and the execution times going down. All the small mid-cap players who have never participated in large deals before 2020 are now all participating and bringing a lot of competition to all the large players. So I think for large players, this space itself has become very, very difficult, in my opinion.
Okay, so things have become difficult in your opinion. Thanks. That's the word coming in from Sandip. Thank you so much for joining us on the show. Always a pleasure to speak to you as well. Wipro has